I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara, and this is the Know Your Why podcast. Today I'm here with Chris Grenzig. Chris is the founder of JAG Communities and JAG Capital Partners, a vertically integrated multifamily advisory investing firm based in Jacksonville, Florida. Chris, thanks for coming on the show today. I appreciate it.
Yeah, thanks for having me, bud.
Yeah, and I would just love it if your bio is very interesting, and as I mentioned before we start recording, I've heard you on other podcasts. I think your story is a really cool one and helpful to other people. So if you would maybe just dive into your background a little bit, and then we can kind of take it from there.
Yeah, absolutely. So I'll go back, keep it quick, and then spend a little more time on the real estate side of things. But I am from Long Island, New York, born and raised. I graduated from Hofstra, which is on Long Island, in 2014. Played soccer there, Division I, then coached Division II for a couple years, just bouncing around. Realized wasn't really for me and was looking for something else. So I got my first quote unquote real job as a cold caller for a stock brokerage company. And it was terrible, but cool at the same time, because it opened my eyes up to the business world, to investing. And I learned a lot of stuff. I got licensed. I got my Series 7 and 63 in January of 2016. And as I got licensed, or as I was, getting licensed, I kind of really got exposed to the industry, and it just wasn't really what I was about. It was very much, the focus was all about how much commissions you would make, and they didn't really care if people made money or lost money. So I was like, that's dumb. That's not how you treat people, and just didn't feel comfortable doing it. Besides the fact that, you got to make 400, 500, 600 calls a day, work 10 plus hours a day. So as I got licensed, was looking for the next thing to do, and was very fortunate that my mom and my cousin had decided to buy a single family flipping course. I tagged along with that for their weekend immersion seminar, and was hooked. Knew nothing about real estate before that, so completely brand new. My only exposure was I rented a house for 1 year or 2 years. That was it. Started trying to flip in Long Island for, nights and weekends for several months. Failed, never put anything under contract, really offered on stuff, but it never worked, and just kind of hit roadblock after roadblock. Decided for various reasons we were going to pivot. Started looking at out-of-state stuff. Lent a little bit of money to try to get our foot in the door. But through that, we met John Cohen, who is one of the co-owners at Toro, where I worked previous to forming JAG. Without jumping ahead, but met John. He was going to show us how to buy tax deeds in Philly. We didn't really love that. And he was doing multifamily. He had transitioned over to that. He was doing small multifamily and was in the process of transitioning into larger assets at Toro. And we kind of prolonged his stay in the smaller stuff by partnering on, 100 plus units across several properties out of New York, in Kentucky and Florida. While we were doing some of that stuff, John and I happened to be sitting down one day, a lot of similar stories, a lot of, stuff going back and forth, and it resulted in them basically offering me a short trial to come over and work for Toro on a full-time basis. So I said yes, went over there, took a pay cut. They kind of coached me up. 3 months turned into a little over 4 years. It turned into basically growing and running the entire Florida region of their portfolio. So while I was there, we bought 4,000 units worth around $300 million worth at acquisition across 23 properties. 7 of those properties were in Jacksonville, Florida, totaling about 1,000 units and 60, 70 million at acquisition. We went full cycle on 2 of the ones in Florida and 7 across the portfolio. So I got to see it, underwrite, buy, go under contract, asset management, and eventually sell. Most of them, all of them for profit. I think only one of the 7 kind of underperformed. So it was really cool to see. But early 2020, I had, Toro done a good bit of business. I would get commissions and profits and, percentages and stuff. So I was coming into a good bit of money and kind of got the first opportunity to buy a decent sized building for myself instead of rolling stuff in with Toro. And I was like, all right, let's go just buy something, no investors, full control, all that stuff. Talked to my parents too. And I was like, hey, would you guys want to like partner with me? Like instead of buying a 5 unit, we could buy a 15 or a 25 unit deal. And they were like, yeah, we're interested. Then COVID hit, March 2020, February 2020, whatever it was. The world was kind of falling out, or so we thought, at least on the multifamily business side. I thought it was going to be 2008 reincarnate. I convinced my parents to put some real dollars aside to, try to offer all cash on what I thought was going to be struggling small apartment complexes in Florida. The idea was buy something for 20, 30, 40 cents on the dollar, renovate it, lease it up, stabilize it, and then eventually refinance and have a great asset for, no money out of pocket. That never really happened if you've been following the market at all. However, in the middle of 2020, came across this 16 unit deal in Orange Park, which is a part of Jacksonville, just outside of it technically, but might as well be part of it. Toro had just bought a 117 unit deal around the corner, which I brought to the table and really, really liked. Almost the same floor plans, almost the same year built. So kind of like a copy and paste, just at a much smaller scale. So super compelling, put it under contract and kind of put it out there to my network and social media that we were going to be buying this property. And I probably had a few dozen people reach out to me and be like, what does this mean? Are you leaving? Are you going off on your own? And I was like, no, just buying a deal, like no big deal. However, kind of put the idea of it in my head. And you have to understand part of the context too was I'm up in New York. New York is locked down. I moved from my apartment in Brooklyn, an hour and a half east, to my mom's place, 55 and older community, gorgeous, brand new, but 55 and older community, living in mom's basement, going stir crazy. But also a bunch of other reasons, decided I was going to leave Toro, move down to Jacksonville when we closed this deal, and I was going to build JAG, being a vertically integrated company, which I'd never done property management, never done construction management, but I decided that's what I was going to do. So moved down, closed that deal, and then I'd come up with the vision that we were going to scale to 500 million in assets under management, all vertically integrated within 10 years, have somewhere between 60 and 100 people on payroll, probably generate between 5 and 8 million in annual revenue, and built out a whole 10-year plan. So we are about 14 months into that 10-year plan. We just closed our 3rd deal for, so we're up to 60 units now. We have 2 more deals under contract. One is a 12-unit existing deal. One is a hopefully 35-unit townhome new construction development deal, which is going to be super awesome. We're trying to break into the development space, and got a couple other irons in the fire. So hopefully we'll have a few more by the end of the year.
Awesome. No, it's really great story. And I'm always fascinated by it. Every person I interview here, it's like every piece along the way, everything that you do along the way, even the things that you didn't like, right? The cold calling and stuff like that, all of that, I think, contributes to, each next step in that evolution, each part of your journey. And so I think, when you worked for Toro, you took that sort of, as you said, you took a pay cut. That was kind of a way to get yourself in the door, right? Like the people always talk about, it's either you have to have time or money. And so you kind of give something up to get into the game. And so when you made that step, when you did that, what was kind of your mindset at that point? What were you thinking? Were you thinking, oh, this is going to get me, did you have that grand vision then? Or was that sort of like, I just need to figure this thing out and get going?
So it was at the time, I was trying to leave in that job. I was desperate at that point. I had prolonged quitting because I didn't have something else in place. And my mom was like, don't quit without another job lined up. She's like, that's the worst thing you can do. And I was like, okay. But I was at the point where I was about to be like, screw that, I'm done. I would rather sit at home and do nothing all day or try to do the real estate stuff than whatever. I wasn't living at home. Fortunately, I've always lived pretty cheap. So I was living in like a college house for $500 a month with like a tiny, crappy 1 bedroom to myself with shared bathroom, shared kitchen, all that stuff. They turned a 3-bedroom house into 7 bedrooms. So, which, $500 in New York and Long Island is like, it's tough to find. And it's, it wasn't that bad, but it was not great either. So I was fortunate enough to be in a position that, I could take a step back and kind of, basically barely afford to live for a little while, and just kind of see how it goes. So I just took it as like hey, I'd rather make less money now and not absolutely hate my life than, let's try something new. And, I'm about to quit anyway. So I looked at it, my worst case scenario is, I don't make a ton of money and I just quit this in a month and, whatever. So I figured it can't get too much worse. So that's why I did it. And I thought, I really like the real estate stuff. I like working with John on some of these other things because we'd already started talking and working together. And I just really thought it was going to go well overall. So, I think I was making like $300 a week for a few months, and then went up to $500 a week for a few months. And then eventually, went to a real salary and, a real compensation. And then, it went to good pay, and then it went to, really great pay where I was able to save up. And, I structured my compensation based on how much business we were doing and stuff. So the more business we did and, the better the deals did, the better I did. So it took a little while to get there, but I don't know. My whole journey is just kind of like, I'll just try stuff if I think it's going to work out. And if it doesn't, I feel like I can figure something else out.
Yeah. Yeah, that makes sense. And so when you went to Toro, were you sort of strictly focused on acquisitions, or were you just kind of doing it all?
I got in there and it was strictly like, hey, get educated and then do this grunt work. That was it. Then it was help us with some like asset. Then early on, it was like strictly asset management stuff. So again, grunt work on like, plugging in financials and rent rolls and putting stuff together to help them analyze and do investor relations and stuff. What happened was one of the deals we did was down in Jacksonville outside of Toro. And my role was the asset management side for that. And what happened was, because I was doing the asset management stuff and because John was one of the GPs on that with myself and, my mom, my cousin, and someone else, we would talk about it sometimes in the office, and it wasn't a secret or anything. Like, Don, John's partner, knew about it. But I kind of went to him when I said, guys, look, the deal's going well. Florida is a good place to be. Jacksonville's kind of under the radar. Like, I think we should look for more deals here. And they're like, okay. So that kind of started the acquisition side. And it really only happened because I went to them and said, what do you guys think? And, lucky enough, and to their credit, they were like, okay, go for it. Like, spend time doing it. And that turned into, a good amount of business for them. 1,000 units, basically, 25% of their business while I was there that, they may not have had otherwise. So, just kind of took it upon myself to try new things. And I did that in a couple other avenues while we were there too. And, paid off.
Good. So then, kind of being a part of different aspects there with them, I'm sure it was helpful then when you sort of decided to go off on your own and form JAG, that you had seen, if you had been solely an underwriter, solely, asset management, it might have been hard to pick up on the acquisition side or whatever was missing. But I'm sure that helped you and prepared you for this step. So you talk about being vertically integrated, and I think it's something that a lot of people bring up, and, most often it's brought up in companies with like thousands of, 1,000 units under management.
Mm-hmm.
But I think your idea of sort of starting that right from the beginning is actually a really good one, a really good concept. You sort of control everything. Was that, I mean, what was your thought process there when you decided to do that? Was it, oh, I'm going to self-manage these, and so I'm very, or was it like, this is how I see things going?
I mean, there's several reasons. I'll touch on a few of the big ones. One, I had always, I guess this is kind of two, but one is I felt a disconnect from my understanding of the operational side. Like, I felt like I was so reliant on our property managers, and a lot of times it worked, but sometimes they were wrong. And I was like, I don't know. So I've got to rely on them. And in business, you're always going to have that. You're always going to have some sort of partners. You can't have everything in house, right? That would be crazy. Or you'd have to be massive, and it's just like, whatever. So at some point you're going to have partners, and you do have to rely on them. But for this, I was like, I don't know. And, there's a lot of companies that are vertically integrated. So I always thought, for me, I was like, okay, the potential, no, sorry, I'm skipping it. My knowledge doing property management, overseeing construction would make me better looking at deals, because I would have more intimate knowledge of how this works, how quickly it can happen, how much stuff actually costs, what are construction materials to look out for, how much does it cost to replace, all of that stuff. Two, a lot of times with our property managers, there was always some sort of disconnect, right? When you have two companies, they have different visions, different core values, different ways of doing things. You obviously want someone that closely aligns with what you're trying to do. And a property management company overall has the same goals as you do, but they're never perfectly aligned. And a way to actually illustrate that is, there's kind of a funny saying, is property managers don't want to be too good at their job, and they don't want to be too bad at their job. Because if you're too good, the property does extremely well and the owner sells it. If you do too bad, you suck at your job and you get fired. That, like, the fact that whether, there's some truth in jest, right? The fact that a property manager might be thinking, hey, I don't want to do too good because then they're going to turn around and sell it and I'm going to be out of a job, is asinine to me as the owner. Like, I'm going to hire a partner that doesn't want to do their absolute best. Like, that is kind of crazy when you break it down like that. Now, a lot of companies will say we don't do that, and maybe they don't, right? But the fact that I have heard that from several different people and owners means that in and around the space, there is some truth to that. So it's like, okay, like, that's just a perfect example of how it could be misaligned. But even like, the way you do your weekly, quarterly, yearly reports, right? A property management company is going to have their way of doing things, but they're going to have several different clients. They can't come up with, they can't take their owner's report and do their report 7 different ways. They have to do their report the same way. And then if we have multiple property management companies, which we did, well, we've got multiple different types of reports coming in. And then we've got our reports we send out to investors. So we've got to take that info, it's just like, it just adds extra things. So my thesis is that by being vertically integrated, the potential for increased operations and streamlining is higher than if you had a third-party property manager. You can be vertically integrated and still be really shitty at your job, and you'd be better off with a third-party property manager. However, I think having it in-house gives a higher potential to perform better from top to bottom. Thirdly, I wanted to be in the market because I felt by targeting sub 100 unit properties and being in the market, I could move quicker on deals and it would be a better story, especially for mom and pop owners who may or may not be local themselves. And that is definitely proven to be true. I mean, we've had a few deals already that we've won or been close to, and it's because I know people that are in the area and local, or I networked with them while I'm here. And, for me, deal sourcing has been huge, and it's been almost entirely through networking. Very, very little direct to owner direct mail, stuff like that. I still try it here and there, but not at scale and not at the pace that I need to do. Basically, I'm hoping that when I think about it and I sit down and do it, that, I'll get lucky, but I don't do it systematized or at scale. We've got, 50, $60 million worth of deals in our pipeline right now. We won't buy all of them by any means, but, it's been pretty interesting to see how that's actually played out. So there's other reasons too, but, I could do the whole podcast on them, so I won't do them all.
I mean, those are some really excellent points. And I agree with you. I think, property management, I think, is a challenging thing because there's, I think, a lot of less than desirable property management companies that don't do a good job, and they put a bad name on the ones that do, even. And it's a valid point that they don't necessarily want to work themselves out of a job. So you could look at it from that standpoint. But I think what's really interesting to me about it is just the process, right? So you decide you're going to be vertically integrated, and you're going to handle the property management. And I in my head, I sort of break it down into, there's property management tenant side of things, and then there's the property management, which is like the construction side of things.
Mm-hmm.
And those are two really different beasts. And personally, I love the construction side of things, but I don't like the tenant side of, I don't want to specifically have to be screening tenants and things like that myself. So are you doing all of that? What is your preference? How do you see that, sort of working?
So I have 3 people that work with me now, one of which is my fiance, who's fairly recent, last 4 or 5 weeks, but I also have a community manager and a maintenance supervisor. I did everything for the first December, January, February, March, 4 or 5 months, roughly. I was fortunate enough that the second deal we closed on in February 2021, I was able to interview and then hire both the manager and maintenance supervisor for those deals about a month or 2 afterwards. So that's why it's like about 4 or 5 months. I couldn't afford it at the time. And honestly, the second deal that I bought came too quickly, but both the deal and the 2 of them were opportunities that were too good to pass up. And I didn't come down here to be a property manager. So by being able to relieve that side of things early on has led me to be able to do other things, as well as 2, they had worked on those properties for like 5 and 10 years. The 2 of them, having worked for at least 5 years together, have built up some systems and ways of doing things. I was able to somewhat tap into their already established loose systems to help establish our own systems and ways of doing things. So there's a lot of different reasons for doing it. Fortunately, I have not had to do as much of the tenant property management stuff, especially in the last, I'll say 4 months, 5 months. I've really given them more of the reins and really kind of stepped away. The construction side of things, I have been doing mostly myself. The maintenance supervisor has been helping more recently, but I will probably be hiring a project manager inside the next, 3 to 6 months, if not sooner. I'm not good at it, just flat out, just not good at it. I kind of just do it through grit. I don't have the experience in it, and I don't have enough time to really do it as well as it needs to be done. Fortunately, our first 2 deals are kind of done being renovated to a certain degree, so I can focus on the 3rd and 4th deal. But we'll need that. And as well, I'm probably looking to hire a regional manager as well here too, to even take a further step back from the property management side. So yeah, I mean, did it for a little bit, enough to get dirty. I'm kind of overseeing in the weeds a little bit more now. So like, even though I'm not necessarily doing a lot of things, I'm also making a lot of the decisions about like, filing 3-day notices and 7-day notices and evictions and dealing with tenant issues. And, when emergencies come up, how do we handle it? So a lot of the high, mid-level stuff I've now kind of been doing a lot of, and not necessarily like leasing and showing units and stuff, which I did for a little bit and have now handed off. That's kind of been more what I'm doing. And then, the goal is within the next year to kind of hand that off to, especially if we, close a couple of these deals we're working on. So, I mean, it's fantastic experience. I think it's going to serve me well for a really long time. I think it's something investors and partners will like too. But it's not something I'm looking to be doing, day to day, right? In my 10-year vision breakout, part of the thing that I did was I sat down and created a whole org chart. So for JAG Communities, which is the property management, construction management side, and for JAG Capital Partners, which is, like the syndication side of everything. The whole property management side, I will probably be like the quote unquote CEO, but I'll probably have a president or CEO or COO of the JAG Community side. The JAG Capital Partners side, I will probably still be that COO president position of like day-to-day operational setting, in there and helping out, still overseeing, but, being more involved in the day-to-day and removing myself a lot more on the property management side. So, that's kind of what my vision is of it now.
And I did want to ask you about that vision because it's very specific, which is great. I mean, that's kind of what they tell you, like make this plan, and then implement. How did you come to that? I mean, how did you sort of decide, okay, I want, $500 million assets under management in a year or 10 years? Like, how did you get to that point where you decided that was, sort of where you wanted to go?
So part of when I thought of the idea of like come down and vertical integration, I immediately was like, is this even doable? Like, not only can I do it, but like, is it possible in the framework of itself? Right. So one of the things I looked up was, I had focused on 100+ units for Toro. So like, I knew that market pretty well. I knew how many deals there were and stuff of that nature. But I was like, how many deals are out there sub 100 units that I would realistically buy? Because there's parts of town I just won't touch because I don't want to own or manage in those areas. And I did know to a certain degree that a lot of those sub 100 unit, 20, 50, 70 unit properties were in areas I didn't want to buy. So for me, it was, well, shit, is there even properties for me to buy in areas that I want to manage? Or am I going to have to bend or do something else? So, pulled a list and scraped into all that stuff. And, fortunately there's, hundreds of deals that kind of fit the criteria I was looking for. And that's, for the next 3, 5, 7 years until we do eventually build up to the larger stuff. So for me, I was like, okay, if there's 200 properties and I'm buying 4 a year, let's say, and I need to do it for 7 years, that's 28 properties out of 150. I feel pretty good about that. Like that's enough for 200, right? I don't need to buy every single deal that exists. And that doesn't include, right, like duplexes, quads, 6 units. That's not the way Jacksonville breaks it out is 2 to 9 multifamily or 10+. So there's like 150 of just 10+. So like if you package up 2 6 units next to each other, that would qualify. I wasn't even counting that. So I was like, okay, there's enough stuff. And I bring that up because the second deal we bought was 6 quads that were all contiguous right next to each other for 24 units. And it's an amazing deal. So like we can be creative like that too, where, being out of state, maybe not, but be that as it may. Part of then that was like, okay, if there's even deals for us to do, which is good, there's enough to buy, like what's the goal? And I think part of the reason I really sat down and spent as much time as I did was I had listened to something and I have no idea what it was, but they pointed to some study that was basically like if you blindfold people on like a football field and say walk from 0 to 100, people just walk in like a 60-yard circle. And basically they're, the extrapolation of that is like, if you can't see where you're going, you're doomed. Like you're never going to figure it out. And I had been very against future planning in the past, and I kind of changed. And I said, all right, let's sit down and do it. Like, let's actually come up with a business plan. Like, how much is this going to make me? Like, how much am I going to have to do? What does this entail? is the reward worth it? Like, I figured it was, because this real estate investing game has been around for decades, if not centuries, in the same kind of structure that I'm working on. And people have done incredibly well on it. So, in my head, I was like, this works, but like, does our specific kind of idea and plan work to a certain degree? And then, with the caveat that I've always said that if in 3 years I'm like, screw property management, I absolutely hate it, this is a waste of my time and I can make way more just outsourcing it, that's up to me. Like, as long as I can live with it, I don't really have to answer to anybody else on that. Yeah, you might have to work on raising money again, because you're shifting a lot of your focus in your business plan, but you can always pivot and caveat. But without that kind of that North Star and wherever you're going, it's pretty tough to know what you're shooting for. So I just came up with 500 million and then just kind of backed into it and said, like, how much would I have to acquire every year to hit that target? I also baked in a little wiggle room. And then I also said, like, we're realistically going to sell off, especially if we're going to move up into 150 unit properties, good chance we sell off some or a lot of the smaller properties in 5 to 7 years. Also baking in room, for selling off properties. So over a 10-year period, it has us acquiring roughly $640 million worth of property, selling off roughly $100 million worth, and having under management $540 million by the end of year 10. But it's in our first year, it was acquiring 5 million, which we did 5.35 in like 13 months. So a little late, but a little extra. 8 million in year 2, which with these 2 deals under contract, we will surpass our year 2 mark. We'll do about 9 million, because it'll be about 7 to 8 million plus just under 2 million. So anywhere from 8 to 10 million bucks, let's say. Really more 9 to 11, actually, now that I think about it. Year 3 is like 13. So it's anywhere from like a 35 to a 60% year over year increase. But it's, like the thing you see where the tiny domino eventually knocks down the big domino. Our year 10 is acquiring $200 million worth of real estate.
I mean, that's fantastic. I've really never heard anyone spell it out that specific. Like, everybody says, oh, I'm going to have my, goals for the year. This is the plan. But I don't feel like I've heard anyone talk about, this is what we're going to do over the next 10 years. And this is how, this is how it's going to step up each year. So that's pretty amazing. And I don't know, I feel as though it's very likely that you'll get there well before that. It's nice to build in that cushion, but I think it probably won't take you 10 years is my guess. You'll start to ramp up quickly.
Yeah, I mean, I'm working on like a $6 million deal too right now. So there's a chance we do that. And then, it kind of blows it out. I mean, a part of me was like, maybe I do $1 billion, and that's like a real stretch, but it kind of like, I don't know. I was a little scared to do that. I was like, 500 million feels like a stretch, but safe. Yeah. But now that I'm kind of like 14, 15 months into it or whatever it is, I feel like I probably did undershoot a touch. But for me, it was like, okay, if we on average increase, our acquisitions 50% every year, that's pretty achievable. So maybe I undersold myself a little bit, but it was also for me too, like, if that's what we did, like, it's going to be still really great and we're still going to do very well. And personally, I'll do really well. So it wasn't like I looked at it and was like, this isn't enough, or this isn't whatever. I was like, this is doable. And, if we do even better, fantastic. So I don't know, maybe in another year I'll adjust and double it or increase it or something like that. I don't know.
Yeah, for sure. I mean, it's a great goal. It's plenty, I guess, but it's just the way that you have it kind of structured and laid out in your mind is really impressive. And I think, people can learn a lot from that it's like, okay, here's the goals, make them something that you think that is achievable. And then if you surpass that, then great. And, there's things like, there's your 10-year goal, right? Well, you're young, you have well more than 10 years and that you could go beyond that too. So it's like, there's plenty more that could come, but I think it's very cool sort of process that people could lay out for themselves.
Oh, just real quick. Also, part of why I didn't, now that I remember, part of why I didn't shoot higher was, when I took like assets acquired and like broke down roughly how many units it was, which I'm off, by the way, because Florida's gone crazy on their valuation. So like already within 6 months I was off. So stuff like that happens. But I like broke down like roughly how much, revenue we'd make and acquisition dollars and, promotes and all that stuff. But part of it was looking at, because something that holds you back with this is, GP equity, right? You've got to, have skin in the game unless, you don't, but most investors want to see. And honestly, I want to have skin in the game, right? Like that's what makes it fun, right? When you not only make money on other people's money, your own money you put to work makes money. Like, I put 50 grand in a deal. Like I worked fucking hard for that 50 grand. I want to see it do well. Right.
Exactly.
Or if it's 150, it doesn't matter how much it is. Like, skin in the game's fun. Like that's, this is not meant for me to be boring. Like I like this stuff. I didn't want to shoot too high because then the GP equity, already a cumulative GP equity, I think I need like $24 million. I sure as shit don't have $24 million. So figuring out years kind of like 6 through 10 is still up in the air of how I'm going to do that and how it's going to look.
Right.
I think with like refinances and sales, I think total at year 10 with like money back, it's only like 10 or 11. So I don't know if I'll have that much after 10 years, but I feel more confident in hitting that. And obviously if you double it, you're talking about, 20 plus million and 50 million, cumulative. So that was another reason why I kept it at the 500 was I felt that might be a limiting factor, and it'll change probably, but I'm not like super gung ho to be like, crazy co-GP stuff. So.
Right. Well, I mean, by no means do I think that 500 million assets under management is a small goal. So I think it's perfect. I think it's a very, very well laid out plan that I think is achievable. And especially when you sort of, sounds like you took into account all those factors and sort of brought them in as one. And this is what you think you can do. And, plans change over time. And so however that works out, I think will be great. And I think getting yourself vertically integrated right from the beginning is also a great idea, because when you get to that level of assets under management, that's when people think, oh, that's when you sort of should be vertically integrated. But it's, if you are somewhere in the middle of that acquisition process and then you're like, now I want to get vertically integrated, that's probably a lot harder to implement than it is if you just have it going right from the beginning. So I love the strategy.
Yeah. I mean, I also at Toro, we used to basically like really talk ourselves down a lot more than we probably should, like internally, not even out loud. I mean, maybe to a certain degree out loud because we've done podcasts and stuff, but we would always say like, what the hell do we do differently? Like, what is, especially like, we say this all the time. Like if you're a syndicator and you buy a marketed deal, you use a third-party property management company, you use a mortgage broker, and it like, yes, the $100,000 investor cannot go out and buy that 200 unit property by themselves. So you are giving a service, but like, what are you doing differently than, the other syndicator right next to you? And then when you talk about like, why should you be the one buying this deal and somebody should invest with you? It's like really tough to justify the answer not being like, well, I offered the most, so I won the, at the end of the day, it's like, now you might say, oh, well, everybody else is looking at spending this per door and we're going to spend more and we're going to bump rents accordingly. And there are answers to that question, but it's sometimes it's a little tough to justify coming down, being in the market, being vertically integrated. It's like, shit, that's like a real competitive advantage. There's not a lot of people I'm competing against that necessarily have that, right? If you're like, I back into it too, right? Like, what is my, if I'm the customer, because I, in theory, could be like, I actually debated about doing more of a fund to funds thing. Like I was like, I'll just sit in New York and I'll just raise money to place in other people's deals. because the Joe Schmo LP doesn't know what the hell they're looking at, but I do. So trust me, that was going to be it. But I was like, nah. But for me, when I back into like, hey, if I'm the LP, what am I looking for? And I'm looking at a sea of, potential people to invest in besides the deal itself, which I think is less important than the person running it. Like, how do I differentiate myself? Like, that was a large part of coming down to, like, I don't particularly enjoy managing properties. It is not a fun business. It's actually a very tiring business. It's actually inhibiting my ability to buy deals, which in theory makes me make less, right? Like, property management, you break even when you're vertically integrated. Like that. I connected and called a ton of people, probably 20, 30, 40 property managers in varying degrees. And a lot of them said like, hey, if they were owner operators, our property management just breaks even. So like, you're running two businesses, one of which doesn't make you any money. Like, you're not doing it for the profit. You're doing it for the control, as well as it sets you apart. And it was really visible to me when at Toro, we started exploring raising money from institutional partners, more family offices, private equity, hedge funds, et cetera. I would say at least 50%, if not more, their first question would be, hey, are you vertically integrated? Do you have property management in-house? If your answer was no, which ours was, come back to us when you are. It was a non-starter. And it makes sense, right? Because imagine you're a private equity shop with 500 million to deploy as equity. So in theory, you might be buying $1.5 billion worth of real estate with debt, right? Let's even half, right? $1 billion worth of real estate. If you buy $1 billion and you charge a 1% acquisition fee, that's $10 million. Why not just hire somebody that does what Toro does to go buy your own deals, hire the same third-party property management companies, pay that person $500,000 per year for the next 5 years. It's going to cost them $2.5 million instead of 10. They just, increase their returns by $7.5 million. It makes sense, right? When you're in-house and you're an owner operator, especially if you're not a third-party management company, which I have no intention of being, that group, that investor has no choice but to get in on the deals or to use your services as an operational person unless they invest alongside you. So just kind of all the things I've thought about as part of it as well.
I mean, fantastic point. I wasn't aware that, the family offices and private equity groups want specifically to be vertically integrated. I know other people that, have investors from those larger institutional type investors, and they're not or are not vertically integrated. But I mean, it makes sense. Your points make a lot of sense.
At the end of the day, it all depends, right? Like I said, right. 50%. So, you talk to enough people, there are people that will do it. And we had raised institutional money on a couple of deals. So it's not like we didn't have it.
Right.
But there was plenty of them that said no. And look, we did not make a strong push into the space either. We kind of like dipped our toe in and see what would happen. So by all means, that ratio could be different. I'm by no means an expert. So if anybody's listening, like, yo, you're wrong. Like, I'll introduce you to 10 guys. Hey, please, I'll take the introductions, right?
Yeah.
But in my experience, there was a lot of people that said no. And I can understand why when I start to back into like what they could do alternatively. Like, there's somebody like me that will gladly take 500 grand a year to go buy deals and hire Pegasus to go manage them.
Yeah. Well, I mean, and as you said, if 50% of them think that way, that's 50% of a tremendously large pool of investor capital.
Oh, for sure.
And so if you can set yourself apart to be, someone that they're going to want to invest with, that's huge. That's huge. So I think it makes total sense. I mean, I like all your points, and I like the idea of being vertically integrated. I just don't want to manage tenants directly. I don't want to do the screening process. So it's like I said, I love construction. That part's fun, but the does this person qualify side of it is something definitely I would want to hire, even if maybe they work for you, but someone else needs to be doing that process.
Yeah, I hear you. And look, I think it's I'll grind for a while until I can kind of, you know, delegate and be less involved in the day to day and just more of like an oversight role of like working on like our systems, our processes, our way of doing stuff, and, trying to make things better while somebody else is really handling the more day to day stuff. But I'll grind for a few years. Like, I had no problem. I've been an athlete my whole life. I'm used to, running sprints and doing laps and huffing and puffing. And you don't touch a ball for months because you've got to get your fitness up. And then, then you get to the fun stuff. Right. So for me, it's just kind of like, I don't know, I've been doing it my whole life. So
Yeah. Yeah. Fellow soccer player. I like the soccer analogies that those work well.
Exactly.
Well, Chris, let's switch gears a little bit. Let me get to the section of the show where I get to ask you some questions specific to the show. First one is based on the name of the show being Know Your Why. What is your why? What's driving you to, towards this massive level of success?
It's really two things. One is as close to ultimate freedom as possible. I want, to a certain degree, the ability to wake up every morning and be able to do what I want to do when I want to do it, to a certain degree. The idea of in 10 years being like, hey, you know what, I'm done building a company, I want to sell it, or, slowly roll out with investors. If that's what I want to do, fantastic. If I want to go on a vacation, fantastic. I mean, obviously I'm limited, right? I can't, it'll be pretty tough to buy $100 million yacht at any point in my life. So, there's some constraints there, but, that's kind of the main one of like within a certain realm of realism, doing whatever it is I want at whatever point. The second one, and this kind of ties into the whole, building a business and vertical integration and stuff, is, but a lot of friends and even my, now fiance too, who have had really pretty crappy, if not outright shitty working situations. Whether it's low pay, low time off, just not really loving it and not really feeling like they have a lot of other options. I just want to build something that people enjoy working at in one degree or another. And I think that how I want to do things would be pretty nice for people. And the challenge of building something like that is really intriguing. And it's also too, if I can set an example for other, business owners and stuff, hopefully it spreads beyond that too. So for me, building that place for other people is a pretty big driver as well.
Awesome. Yeah. I mean, creating a company that people want to work for is, I mean, it's very noble. It's also, I think, pretty rare right now. There's not a lot of, there's not a lot of people that sort of love going to work, and, we can see the shift in the job market and all of that. So I think that's fantastic. Second question for you. What is something about yourself that maybe isn't common knowledge? People don't know, hobby, a special skill, something that isn't common knowledge, but will let the listeners know you a little better.
Let me see. I mean, when I get this question, I'll mention it. I'm a pretty big fiction reader. I really like fantasy novels, like world building and stuff like that. So been reading a lot of Brandon Sanderson lately. Me and my fiance, we've got probably like, I don't know, 15 books of his, and we're trying to work through them, but some of them are just like 3 books into one. So it takes a while. I don't know. That's usually the main one that I think of. There's not, otherwise I'm not really that interesting, to be perfectly honest. So,
I mean, you also started out with being, Division I soccer player, which to me is a big deal. So I appreciate that. But cool. I mean, gosh, I haven't gotten to read much in fiction in a long time, but I do miss reading a lot of Stephen King. That was always my thing when I was younger. I would probably read every Stephen King book for, I don't know, 10 years of my life or something like that.
Yeah. I'll usually like for, every few months I'll like bounce around to another thing to just kind of like escape. So, I did 75 hard. I'll get into a video game or something. I was playing a few months ago. I got really into playing Catan for a little bit, and bounce back and forth between. I'll always kind of wrap in reading at some point. Like, so I don't know. There's always something that kind of comes up that I get into for a little while, and then I kind of fade out and end up doing something else. So
Yeah. Yeah. I'm in the middle of 75 hard right now. It takes
nice.
a lot of time. It's a big commitment. I enjoy it actually, but it's a big commitment, just making sure you sort of get all of the necessary requirements in each day.
I did it around this time last year. I was 1 minute away from failing on like day 55. I had half my water bottle still left, and I just happened to catch it right before the end of the. I know some people will do like, before I go to bed or something. I always did, through midnight was my thing.
Yeah.
And I literally chugged it right before, and I was within a minute of almost busting. So yeah, it's fun.
The water is the worst part to me. I do not like drinking this much water. It's like my friends, like I have a couple of friends that are doing it as well, and it's like I'm like, the rest of it is great. I like exercise. I like the rest of it is fine. It's all the water. That's the only part that I'm like, I wish this wasn't a part of it. But anyway, next question for you. When people hear this, what's the best way for them to reach out to you? How can they get in touch?
Yeah, for sure. I would say 2 ways right now. We're in the middle of redoing our website, so kind of may or may not be up by the time this goes out. But email is really good. Chris at jag-communities.com, JAG-communities.com. If you want to check it out, that's also one of the websites. We'll have a JAG Capital one too. I don't have a domain yet for it, but best way, just email me if that's, hey, want to pick your brain. If that's, hey, I'm interested in investing. If that's, hey, I'm, need help for such and such. I mean, for anything, hit me up. I will do one thing. If anybody listens, I'm really intrigued. We didn't really touch on it, but I'm trying to learn more about buying existing businesses. If anybody is involved in that at all, or has specialty in it, or knows somebody, hit me up. I'm trying to learn more about it. Or the other best way to get in touch with me is to just connect, follow, whatever on social media. So the main ones are Instagram at Chris.Grenzig, LinkedIn, Chris Grenzig, but I'm on Facebook, YouTube, TikTok, all that stuff.
Do you follow Cody Sanchez?
Who is that?
Cody Sanchez.
I don't think so.
You should check her out on Instagram. As far as buying existing businesses, that's her thing, and she puts out a ton of really good content.
Cool. I'm gonna do it right now.
I'm a huge fan. She's she has courses and things like that you can get too. I haven't actually signed up for any of them yet, but it's
Cody,
it's
Cody,
Codie.
There you go. Cool. I think I recognize her actually, but I'm not following her. Yeah. But I am now. She's
really, really a lot of good, and she focuses on buying existing businesses, but also a lot of the way she has built her social media, like the way she has built things up, is actually, she's got a lot of good actionable tips there. So it's good, good to check out for that. Anyway, final question is, what piece of advice would you give to someone who is getting started in real estate, trying to sort of build their portfolio? What advice would you give them to kind of find the success that you have?
Two things. I'll give two pieces of advice. One, if you're super new and you're trying to figure out what to do, look up the best way to do this. And it's extensive, so, it's not easy. Look up 5 different asset classes, 5 different ways of getting into that asset class. So 5 different strategies. And then I'll say 3 to 5 pros and cons for each of them. You'll have at least, a couple dozen different ways of doing it, why each one's good and bad. And kind of as you kind of pick out those pros and cons, you will start to figure out what sounds good and what doesn't sound good. You'll probably won't narrow it down to one. So you got to, narrow it down. And then ultimately you just got to pick one and try it. And you won't know until you try it. The way I liked to think about it, it's, partly what I did when I moved down, is if you knew today that it was going to take you 6 weeks, 6 months of trying something and you knew it wasn't going to work out, you would start it now so that you were 6 months closer to figuring out what it was. But if you just kind of flounder around and try to figure it out more and just kind of put off the decision, it takes you an extra month to make the decision. Now, instead of 6 months, it's 7 months. So once you kind of get it down to a few and you're like, I'm not really sure, just pick one and try it. Start going down the rabbit hole of that specific one. And it's either going to work and then great, or it's not going to work and it's still going to take you just as long to figure it out as if you started today or a month from now. The second piece of advice would be, if you kind of know what you're looking to do, network with as many people that are doing exactly what you want to do. The real estate community, and specifically the real estate investing community, is fantastic in the abundance mindset type of things for the most part. You can go meet people that are doing exactly what you want to do, and they're not going to not share stuff because they're afraid you're going to buy a deal that they want. Yeah, they're not going to tee up a deal for you and make it super easy, but they'll meet you, they'll talk with you, they'll do whatever because somebody helped them and they want to help other people. So I've had people ask me like, I want to buy a retail center in Georgia. I'm like, why are you talking to me? I know nothing about retail. I know nothing about Georgia. Go find somebody doing retail in Georgia. I guarantee you'll find somebody that is actively buying and owning the types of deals you want to do. And you'll probably find at least one person that will sit down with you and help you on your journey.
Yeah, that's awesome. That's awesome advice. I think that you're 100% right. The real estate community is very, just, I guess, generous in that they're, everybody seems very willing to help people. You have to be respectful of people's time, but it's incredibly giving. People want to give back. They want to share their knowledge and experience with others. So I agree with you 100%. Well, Chris, this was great. Thank you so much for coming on the podcast. I appreciate your time. And with that, we'll go ahead and get checked out.
Awesome. Thank you.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.